Welcome to the BankTalk podcast, the show where we talk to leaders and experts from the community banking sector. Whether you are a current CEO or aspire to be one, this podcast will give you valuable insights and advice on how to run your financial institution better. Each episode explores a new topic with a guest who brings their unique experience and knowledge. Tune in and discover something new each time you listen. Hello and welcome to BankTalk. I'm Jordan Kelly, your host and consultant at Remedy Consulting. Today we're sitting down with Keith Riddle, General Manager of Payfinia, to talk about digital wallets and the very real impact they have on community financial institutions. Keith has over 35 years in the industry, giving him a strong background on the topic of instant payments. So without further ado, let's dive into our discussion. Keith, thank you so much for joining me on BankTalk today.
Jordan, it's been a pleasure to meet you. I look forward to the topics that we're going to discuss today.
So Keith, let's just introduce you to our audience. Tell me a little bit about you, your background, and Payfinia.
Sure. So Keith Riddle, I am the general manager for the company called Payfinia. We'll define that a little bit first, and then I'll talk about my background secondarily. But Payfinia is a independent payment services provider. When I say independent, we connect you into any digital experience that the member, customer, or business would be using for initiating payment activity, as well as any back-end system, whether it's a core loan origination system or other platforms in terms of third-party service support for payment initiation, whether it's receipt or set. So basically, we are an open payment framework that provides community financial institutions an opportunity to innovate in two areas. The instant payment workflows, whether it's the FedNow service or the RTP network, and we have expertise in sending and receiving payments. And we can talk about some of the fraud mitigation aspects we support as part of that have been very performance driven. And the other item that's more germane to the conversation today is that we've embarked upon our effort to enable a community FI branded digital wallet service in conjunction with a company that is early warning and pays, but also additional products and services that fit within a broader definition of a digital wallet that would be available to community FIs. Now, my background, so I'm going on 39 years in the financial services industry. It has covered issuing and acquiring processing, bill payment, e-commerce, cloud computing, digital banking, and now certainly back in the payment enablement area in supporting community financial institutions with their payments modernization efforts. Also spent time at a company based in the UK on some unique SMB functionality that was very interesting, and how all these things start to converge in this new, very fluid payment world.
And to me, we talked a little bit before we got on our podcast today, but to me, your background, all of your experience, and honestly, Payfinia's kind of niche fits really well with the conversation we wanted to have today, because today we wanted to focus in on digital wallets. But to a point you made earlier, a digital wallet, that can be a very broad and ever-expanding definition. So tell me, what's your interpretation? What is a digital wallet as we experience it today?
Yeah, and I'll start with the broader aspect and definition from a Payfinia perspective on digital wallet support. So digital wallet, as most folks understand it, is more driven from a stored value that was within that wallet, where I can leverage that for purchasing activity, whether it is at the point of sale or at an e-commerce environment, which certainly is foundational to a digital wallet piece of functionality. But what we're finding in the broader definition of digital wallet, as the payments market is very fluent, is not only does that apply to things that I am purchasing at an e-commerce or a point of sale environment, but the digital wallet, in having stored value as a facilitator of money movement, is becoming very critical for things related to workflows like disbursements. There was a recent article in the payments.com where it noted that 71% of the disbursements that are done by companies from Bank A are going to a separate FI or endpoint as the recipient of that disbursement. So there's a significant opportunity for financial institutions to look at that type of workflow. And I think the value associated with that workflow alone is something in the nature of $8.2 billion. So very, again, fundamental to the gig worker, somebody who's a contract worker, those that are shift workers, where they want to be able to have the access to value in a wallet that they can facilitate for a variety of purposes. So that's one component. The other component, then the payment environment, there is a convergence of the open banking access to data, which I know is new within this country and is going through its starts and stops in terms of enablement, but also the enablement of stablecoin or a digital asset framework that could be infused within a wallet that perhaps I want to use in terms of my POS or making a bill payment or using as an e-commerce value, given that all parties either allow it or accept it as part of a payment flow. And then finally, you're talking about the final aspect where folks have traditionally leveraged either Apple Pay or Google Pay or other payment wallets or outside of the domain of the financial institution like a PayPal or a Venmo, which have significant user bases that have built up and now are extending more into traditional financial services. So I think if you broaden this digital wallet to be the epicenter of consumer and business activity, it could be the disbursement receipt point, it could be a digital assets purchasing framework. It could be the e-commerce or point of sale transaction in generating revenue from an interchange perspective, but also offering a lower cost point for movement of money from a wallet to an external account or vice versa into that wallet. So that's a little bit of a broader explanation in terms of how we view wallet support and how instant payment support is going to start infusing itself into that in what is generally called a pay by bank environment.
And I think it's important to have that broader view, or really even the broader definition of the wallet itself. Reason being that today we're going to touch on a few of those different integration points. So, one of the things that initiated this conversation or this topic in the first place is that overall and in the community FI space, we've seen a really big growing popularity and need in the digital wallet space, everything that could be encompassed in digital wallets. So, talk to me a little bit about what trends are you seeing in this space? What are you seeing community FIs focus on when it comes to digital wallets?
Yeah, again, I think we'll start focusing in on maybe the e-commerce use case because if you look at e-commerce alone, the 2025 value of e-commerce transactions that will be performed is estimated to be $1.8 trillion,
Mhm.
which is a significant sum when you look at what the market share could be for financial institutions. Well, now you have to take into account that about 70% of that is going to be online retail sales that will be done in a mobile device level in terms of the number of transactions, but half of the volume will be encompassed where it is a mobile device that is initiating the review of a purchase and initiating that purchase, leveraging a framework where that can be optimized. And again, on mobile device, you're talking about that's a natural transition into a digital wallet type of experience. Today, those have been dominated either in a fintech environment by PayPal and Venmos of the world that offer its own unique experience. And then you have to do an authentication and a login, and you have to manage all of that from a user perspective to enable that purchase capability at an e-commerce site. Certainly, there are streamlined ways in which you can do that when you're on your mobile device, when you're looking at Apple Pay as an example, because they are the dominant provider when it comes to the digital wallet support, where that kind of, I'll just call it alias based processing is done. I don't have to provide my credentials. I'm basically biometrically authenticated. I'm passing a token that represents me and my Apple Pay token that is then passed on to other providers between the acquirer and the issuer to facilitate that transaction, and it's done in a matter of seconds. The challenge for financial institutions and community FIs is that you've got the impact where debit cards in younger generations have become the dominant payment method, whether it's point of sale or from an e-commerce perspective. And debit card interchange, as we all know, is a far lesser amount than credit card interchange. And then if you start to layer on the aspect of debit card interchange and you're subtracting what is that digital wallet premium you're paying in the Apple Pay case, you can understand how financial institutions become concerned with the ongoing pressure from an interchange perspective going down, and that Apple Pay scenario becoming more of a part of that transaction where they suffer the net interchange opportunity. Not from a convenience perspective, but from the net revenue perspective. So the consumers, 72% of consumers have stated they value the efficiency of digital wallet support, and about 67% have stated, look, we rank security as the top priority for transactions in an online purchase environment. So where the FIs are challenged, we know there's this burgeoning growth on the digital wallet side. We know there is a security aspect that folks just don't want to go to a hosted payment page and put all the information in and then find out later that's been directed to a fraudulent site that's captured all their data. Now they can go out and basically use their card, and they see these recurring transactions that become a fraudulent challenge for them, as they are for the biller. So the merchant wants more tokenized and secure exchange of data. They want it in a lower cost environment. They want to basically have it where that becomes a very streamlined workflow for the buyer. The FIs should be considering the same. How do I embed capabilities into my digital experience that drive that user into an environment where I can be their epicenter of e-commerce activity and point of sale activity in that broadening set of capabilities we talked about in digital wallet, and facilitate secure payment exchange at a reasonable cost and also preserve my interchange.
We'll be right back.
Ever feel like your tech budget's running the show instead of supporting it? You're not alone. Between bloated vendor contracts and outdated systems, a lot of banks are stuck paying more for less. And here's the kicker. Those big tech vendors, their contracts are built to protect them, not you. So if you're hesitating to make bold moves because of tech costs, it's time to flip the script. That's where Remedy Consulting comes in. We help banks take back control, cutting through the fine print, optimizing spend, and finding tech solutions that actually fuel growth. And we're offering a free review of your tech stack, spending, and vendor contracts. No pressure, no sales pitch, just expert insight to help you make smarter decisions. Even if we're not the right fit, you'll walk away with clarity and confidence. So go to remedyconsult.net or call 206-295-5776. Let's make your tech work for you, not against you. Thanks for listening to the BankTalk podcast.
So what I'm hearing is the consumers like the ease of these transactions as long as the security is there. Now, truthfully, that's what everybody wants. The consumer, the merchant, the FI. Everybody wants it to be easy and they want it to be secure. So you touched on it briefly there. So help me just set the stage, or I guess dig into the economic impact a little bit more, the economic side of the digital wallets. We don't have to talk kind of specific dollars, but from a high level, we know that today, from the FI standpoint, interchange revenue from a straight debit transaction is going to be that's a huge consideration for them. When it comes to when those transactions begin to move into a digital wallet environment, there's an additional cost associated with it. So just give me a broad overview of what that financial landscape looks like and help me understand where the trade-offs are from the FI perspective.
I think the trade-off from the FI perspective involves consumer behavior. So today, as most people get their credit card or debit card, they're prompted to provision or push that into a digital wallet. And typically that's going to be in the Apple Pay environment. But they have to take steps where they've enabled that card and activated the card, and then they have to provision that per card into a wallet environment. So there's a step that's involved that has been addressed in the environment I've talked about with our partnership with EWS and Pays. I'll just talk broadly that FIs should be looking for opportunities where they can help the user to understand there's an acknowledgement, but there doesn't have to be this self-provisioning of a variety of cards that go into a digital wallet. And I'll give an example here in a minute. The other item in terms of the interchange revenue is if they don't self-provision that card into that wallet and they have multiple cards in their wallet, i.e. Apple Pay, and the FI's wallet that they just received hasn't been provisioned, perhaps they're going to be able to use, and it's often noted when you go into things like an Apple Pay environment, that they will do the soft selling of the Apple Pay card as a way for it to be priority routed as the proxy for making e-commerce transactions or point of sale transactions. And I'd have to select my card and define a default card to do things otherwise. And you certainly can do that within a digital wallet. The aspect of having more of an FI branded wallet, not only for the e-commerce and the point of sale transactions, but also for things that are related to what I talked about in the instant payment enablement and being able to leverage digital asset for a variety of purposes like paying a bill or moving money between my account at a community DFI to a crypto environment or a brokerage environment, and also bringing that back into a wallet as a definition is important. But from an interchange perspective and security perspective, lessening the steps in the workflow for the consumer so they can go into a trusted digital experience, which is their financial institution's experience. I can activate a card, which the FI has actually self-provisioned into a platform like Payfinia supports, and being able to have that done more at scale versus on an individual card basis, having to worry about doing that into a separate wallet is something the FI should be focused upon, along with the fact they want to be able to hopefully drive down the expenditure of what they pay for premiums to things like an Apple Pay. I mean, yes, Apple Pay is a dominant provider, but only 15% of the Apple Pay transactions today, or 15% typically, of e-commerce transactions are done from an Apple Pay perspective. There is a broad greenfield of opportunity within the community FIs and every FI to get folks within a digital wallet for e-commerce activity where they can optimize interchange revenue. So lessening of the workflow, tokenized exchange to make the consumer feel comfortable in doing so, and also driving them into an opportunity where they can see all their cards in a digital wallet and actually default and place a priority on e-commerce transactions, given that only about 15% of the e-commerce transactions are Apple Pay today.
So I really heard, and in kind of summary of all of that, great area for FIs to be focused on. They should be really looking at building out an FI specific digital wallet. And number two, really step two to that is driving and making sure that their card is the top of wallet choice. Did I hear that right?
You captured it. And I think that what's interesting, and again, I guess I'll move into George sort of the pays aspect just a little bit, so folks understand that, because they'll say, "Who is pays?" Think of pays early warning on Zelle. Obviously, and many community financial institutions take advantage of Zelle. Think of pays as the e-commerce equivalent to Zelle, where I'm able to use a mobile device number or an email address as the method to initiate a payment flow, and I don't have to provide my cardholder details to a merchant to do a transaction. Also consider that when I enroll or register my card activity for pays, and I do that within multiple financial institutions. Maybe I've enrolled at, I'm using an example, B of A, and or registered at Wells, and maybe I've got multiple cards, including Capital One, and then I actually want to take advantage of what the community FI is providing. Where it's powerful in the pays environment is that all of the cards that have been registered or activated within the wallet at Pays are listed, and the community FI has an opportunity to market to that cardholder to default the community FI card. So as they move through their purchasing activity, that they would be able to leverage that kind of relationship and reinforce the value of that. But to the FIs out there listening, 100% of the transactions will be lost when your card's not in a wallet at all. So it goes without saying. But I think the other aspect is you need to look at ways in which you can take advantage of that kind of digital wallet capability on e-commerce, but also think about digital wallet in that broad context we started with. What am I doing with respect to stablecoin support in the future for payment? What am I doing for disbursement support and be able to make that easier for my gig workers that are also customers of the bank? What am I doing to make disbursements more a front and center opportunity for gathering deposits that come into a wallet that's traditionally in the digital banking environment?
So let me ask you, let me pivot this a little bit
Sure.
to the kind of e-com environment versus the point of sale environment. So, for example, I'm a consumer. I have a debit card. I go to the grocery store and I swipe or tap my debit card. That
Sure.
equals a certain amount of interchange revenue back to my FI.
Yeah.
Now, if that were instead a digital wallet transaction at the point of sale, how does interchange revenue work the same way in that sense? Is there a variation to the financial institution?
Yeah, I think the variation will be based upon the merchant services relationship or basically the interchange rate the issuer is securing as part of the type of transaction. If it's a debit card, you've got defined debit card interchange as part of that transaction. Whether they're tapping the premium you're paying is if they're using a digital wallet like an Apple Pay, there is a pricing premium that's assessed to the issuer for that card being enabled or initiated through the Apple Pay wallet versus something they may just do as a tap to pay within the point of sale device. So there are pricing differentials. The interchange rate, I guess the point is it's a debit card interchange or it's credit card interchange. The layer you have to take into account is where it's an Apple Pay wallet or a third party wallet that's being leveraged for the initiation of that transaction, there would be some pricing premiums that would come into play in terms that would impact the net interchange received by the community financial institution.
Okay, so that's interesting because here's a very specific example. But I was at Walmart the other day. I
Mhm.
walked up to the machine, but to check out, I'm trying to leave Walmart, and something that I noticed is that their point of sale. I was using the self checkout. The point of sale was pushing me to use Walmart's wallet, where
Yep.
I, as the consumer,
Yep.
load my debit card into Walmart's wallet. So
That's
just
right.
specify that for me. In that transaction, what is the benefit to Walmart?
Yeah, so Walmart, you can imagine that their volume that you're generating in terms of acquiring transactions, they as an acquirer. The reason that the Apple Pay or acquiring services providers, they're going to have a fee for accepting Apple Pay or other wallet transactions for Walmart. Well, Walmart is the size and scope where they have a much higher negotiating power into these networks or acquiring providers than the typical community bank who's using a outsourced third party. The reason Walmart wants to be able to leverage the Walmart Pay application and having you connect your card into that, it sets the stage for things related to pay by bank, meaning I am paying instantaneously. Today, that would be their debit card, or it could be ACH, where Walmart is acquiring that transaction without the premium of a third party wallet. Walmart is the wallet, and Walmart is basically doing that in scale where they can pass on savings to the consumer of Walmart by making that transaction far more economical than having a third party wallet intercept or acquire costs for an Apple Pay transaction versus a Walmart Pay wallet transaction. So they want to make that incentive, and they probably, I know Target does this as well as Walmart. I believe is providing incentives that may either be higher points when you use your Walmart Pay application to make that payment, or they could offer potentially in real time discounts in the future, where I'm going to use Walmart Pay. Now think about that Walmart Pay application actually being the proxy for you to do an instant payment transaction where it's not even card based, but I'm going to give you a benefit of 5% off if you do that through your checking account versus directly versus and do an authorized push payment versus through your card.
Hmm.
So that is where the acquirers like a Walmart and other large retailers are looking at their own digital wallets as frameworks and proxies to drive a lower transaction fee for goods and services purchased within their environment where they can control the routing and drive unique use cases in terms of instantly paying from your checking account, which obviously brings down not only the transaction cost, but the immediacy and reconciliation and settlement. Any of these digital wallet transactions, we all know there's a reconciliation and settlement aspect that's delayed on the back end, whether it's card or whether it is an ACH transaction. And then you run into things related to either returns or chargebacks that are an impact from it.
And as I understand it, in today's environment where, let's call it, majority of transactions are still being run through a debit card or credit card rather than in that instant payment network that you're referencing, today as it stands, Walmart or whoever the let's call it a large merchant, not an SMB, large merchant is paying quite a pretty penny in interchange revenue over the cost of their business.
They are.
Now,
Yeah.
now,
But I would say, and they've negotiated significantly lower rates than a traditional business would, like an SMB. So it's
mhm.
an even higher percentage if it's an SMB, and I'm paying for that invoice to be paid because they're doing credit card typically or debit card. I think it's 65% of all the invoices paid by two SMBs are either debit or credit card.
And then the flip side of that is that in the push of a Walmart or a Target to move, number one, get consumers to use their own digital wallet. And then number two, push even away from card transactions within that wallet, but to an instant payment method. From an FI perspective, what I hear is an elimination of interchange revenue.
It certainly is an impact to interchange revenue. And you talked about Target as an example, and I'm sure you're familiar with the Target Red Card. And what
Mhm.
they do is basically they are converting what is a traditional, what folks think is a card transaction. The card itself becomes a methodology for converting a transaction from a card rail to an ACH transaction. So even Target, if you're a red card holder, that's why they're able to give the 5% rebate or whatever the number is, because you're allowing them to take control of the routing of the transaction and manage as an ACH entry on the back end versus card, which has significantly higher cost for them.
So if I'm a community FI, it's really the importance of finding that balance between providing the framework and really the product and service of a digital wallet to my consumers because we know that that's where the need and the interest is, and balancing that against almost it's somebody bigger than me getting there first and providing it and then becoming the number one provider or the preferred provider of my consumer base.
It is that, and then having the community financial institutions approach their merchant base with a unique value proposition. The opportunity, we know payments are shifting, and we know this shift is going to become more pronounced as larger providers offer pay by bank and provide the benefit for doing so. The businesses today, we all know, especially the mid tier and smaller businesses, certainly feel the impact of the acquiring rates for cards. If you can work as a community FI with your business base to establish, I'll call it a new interchange reference or framework that, hey, if it's a digital wallet and it's coming out of an instant payment and those things are immediate push payments, immediate reconciliation settlement, very low type of reject or any type of fraud mitigation issues because they're authorized push payments, that creates an opportunity to go to the merchant and define a new framework for payment processing, whether it's an e-commerce or paying a bill that would come into that business. What if they went in, for example, and said it's 1% expenditure for an instant payment versus 3% plus 40 cents per transaction? Now, again, I'm using that as examples. I'm not saying those are the price points, but allows the community FI to establish a unique value proposition as the entity that's providing liquidity and merchant services to that small business or medium business, but also to their consumers and creating a send use case within their digital experience. So you're connecting the community and creating a bridge of valuable experiences to both parties.
Now, as we know, we discuss a lot today, everything from anything that could be encompassed within the definition of a digital wallet or really broader within the instant payments landscape. We know hot topic, important topic for community FIs. I want to ask you specifically the situation, the scenario you just kind of laid out where community FI would, establish their value prop and take it to, maybe SMB merchant in that situation, or I guess in your experience, how often are you seeing your community FIs pursue that type of business relationship?
I think they're beginning to evaluate that and determining where they can infuse themselves, meaning the FI, into that that SMB vertical. And we'll just use that as an example. So one of the biggest challenges in the SMB vertical is getting paid on time. And the fact that 60% of the bill payment transactions in this country are one-time payments, not recurring. And 55% of the US invoice sales are actually paid late. And it's an average of 40 plus days. So if you look at the SMBs that need cash flow desperately, they don't want to pay the premium for that cash flow with card. And if they had a mechanism just for paying an invoice, for example, where that community FI could help them to generate the invoice, to put a secure payment QR code embedded within that invoice, so I could actually circulate that to a user or to a consumer, and that consumer banks with that community FI where you have a fully embedded QR code payment workflow that, again, we took time to develop and already test, that you're bridging, again, the two constituents that are very key to growth as a community FI, your S&B vertical, and giving them a faster payment method that allows for immediate cash flow, reconciliation, settlement, and the ability perhaps for that S&B to discount that for that payment option. And more importantly, or as importantly, the FI in enabling a send use case for instant payment support that's fully secure, embedded within digital banking, leverages fraud tools, and has a much lower price point than other payment methods. And they could participate in that kind of payment exchange with their SMBs through treasury management services and generating the invoice, or maybe enabling that as an acquirer on that kind of use case. So that's an example, one example. And I think community FIs need to look at a broader strategy with respect to acquiring and issuing services, digital wallet. How are you going to facilitate a more streamlined and cost-effective payment service that serves both of those key endpoints and then drives additional value into your community FI base?
So if I'm a community FI leader, I've got a million things on my plate, frankly, and I might have limited resources. So I'm looking at how to best prioritize the use of those resources. Everything from dollars to the time that my team is spending on our strategy overall and all of the initiatives we've got going.
Sure.
What is the takeaway for these community bankers? There's a lot of opportunity here and a little bit of danger of a missed opportunity, I would say, probably in the not too distant future. What would be your recommendation for just how much of time, effort, resources should be dedicated to really expanding the digital or instant payment space?
Yeah, I'll talk on the instant payment front briefly and then on the digital wallet side as well. So on the instant payment front, the financial institution should not forego or miss the evaluation opportunity and enablement opportunity for doing instant payments within the community bank or community FI. What I mean by that, what are you spending today on wire support? How are the slower payments of ACH impacting your ability to grow your auto loan business with dealers? How are you managing post-mortgage closing transactions where I have to disperse to the agent, I have to disperse to the title company, I have to disperse, the funds based upon the seller receiving that? So how are you managing all back-end workflows that you could better optimize in instant payment flows? And I'm not talking about turning all of the send activity to your consumers or small businesses. You as the business, as the financial institution, you should definitely be focusing there, especially if you look at wire expenditures and the number of steps you go through today in handing information to somebody to put it into a FedLine terminal. So focus on FI workflows that you could better optimize in instant, for example, and leverage all the layered fraud controls I know that Payfinia supports within that type of capability. On the digital wallet front, I think the aspect you need to look at is there is a explosive growth on the e-commerce side. And there's a significant effort happening with Pays, and that they're going to be marketing Pays just like there was a marketing effort on Zelle from a P2P perspective. And we all know where Zelle is today. $1 trillion has been basically moved through the Zelle network for P2P. Think of that same effort being applied to e-commerce and Pays. It plugs into your digital experience. It allows for data that you don't have to even worry about real-time integration to the core to enable. And then we put some additional confidential computing effort behind that so it protects all the data. So look at ways in which you can optimize interchange, You can work on the workflows on the back end for instant payment support as an FI and do that in a very organized fashion. So you're not draining all of the resources internally to support those initiatives.
And to your point, as an offset to draining resources, it is again that optimizing of interchange revenue and kind of protecting it going forward from some of the other shifts that are happening across the industry. So
Certainly.
honestly, very timely and important conversation. I really appreciate your time today, Keith, because I think that this was really important and just very prevalent for many community FI leaders today.
Yeah, Jordan, thank you for the time. We certainly are a resource for the community FIs to better understand these opportunities.
Thank you. That's it for Bank Talk. Thank you for listening today. Have a good day and keep on learning.
Thank you for joining us on the Bank Talk podcast brought to you by Remedy Consulting. If you enjoyed today's conversation, please rate, review, and share our work with others. To stay up to date with future episodes, be sure to follow the show and turn on notifications. Thanks again, and we'll see you next time.